The Asian Development Bank says Asia should cooperate on exchange rate policy. The bank says working together will help governments manage capital inflows coming from the US. The ADB says that the Fed's monetary easing may help the US steer clear of a double-dip recession, but it's also encouraging investors to flock into riskier assets in emerging Asia. The ADB says exchange rate cooperation would also boost regional trade, and that might make up for the slowing export markets, which is already weighing on Asian growth this year and next. The bank sees growth in the emerging East Asian economies coming in at 7.3% in 2011, which is heavily down from the forecasted 8.8% this year. Growth in the US will ease to just 2.4%, down from this year's 2.6%, and the bank says the US economy is, and I quote, weak and fragile. And Eurozone growth will slip to even less than that, 1.4%. That's down from the already weak 1.5%. Now, the ADB also says that the flood of cheap US money will keep pushing up the prices of metals and food prices across the region. Now, Iwan Azis is the head of the Office of Regional Economic Integration at Asian Development Bank. He joins me right now. Not one of the authors, but I just asked him quietly. He was quite modest, but he said he is arguably the brain behind the report. Thanks for coming in,
Okay,
Iwan.
Howard.
Let's talk about the growth next year. I know that the elephant in the room, as we now await this long-awaited rate rise in China, maybe this Friday, is inflation. The money that's being pumped into the US, quantitative easing, and many, many countries in Asia, Malaysia, China, Indonesia, have criticized this. Now we're hearing Bernanke only yesterday saying, in fact, anything is possible, i.e. more quantitative easing. The worry is inflation. If that happens, how damaging will it be?
Well, each country in the region has been trying to contain the inflation rate, and I would say in general they are doing it successfully, because if we look at the overall inflation rate for the entire region, yes, it is edging up, but it's still lower than the inflation rate prior to the global financial crisis. So overall, the monetary authority in the region has been doing quite well. In terms of the growth rate, yes, it will be sort of moderating. I will not even use the word slowing down, because it's only going down from 8.8% for 2010 to 7.3%. Now keep in mind that this is all coming out after some of the countries in the regions experienced negative growth during the global financial crisis. So there is a sort of a sharp increase in 2010, the V-shaped recovery from 2009 to 2010, but then it's moderating towards more normal growth. So I would use the word normal growth in 2011.
Your report is a twice-annual look at 14 emerging East Asian economies, including China, Korea, Hong Kong, Taipei, etc. I mean, how is this report different to the last one this year?
Actually, for 2010, we adjusted upward for the growth rate, and including China and Hong Kong, actually, because what happened is that the world trade volume has been increasing more than many people expected, because after the world trade dropped and fell during the global financial crisis, it recovered very, very sharply. It's another V-shaped recovery in the world trade. So that helps, economies that depend so much on the export, including China and Hong Kong.
4 risks, you point out, of all the report: persistent weak growth in the West, destabilizing capital inflows, inflation, mentioned before, asset price bubbles, protectionism. Of those 4, which one worries you the most?
Capital inflows that may put pressure on the exchange rate.
That's the quantitative easing.
Well,
Partly.
not only quantitative easing, by the way, because, if you're talking about capital inflows, you talk about push factor and pull factor. So the quantitative easing can become one of the push factor. But even if money is flowing out from the US, it's still the question where to go. It's not always going to the emerging East Asia. So emerging East Asia is also sort of showing a very strong pull factors, among other things. Good fundamentals, strong growth, and as I said earlier, even though inflation rate is edging up, but it's well managed basically. So all in all gives you a very good high return as well as promising return. That explains why there is a possibility that more capital inflows coming to the region, which means more exchange rate pressure.
One big topic is exchange rate.
Correct.
And I quote your report: regional exchange rate cooperation, if handled wisely, can ensure stability.
Correct.
Is East Asia ready?
I think so. It depends on what kind of cooperation we are talking about. As long as it is institution-like cooperation, I think they are ready, because it has been proven that the intra-regional trade is so much depending on the intra-regional exchange rate. And before the global financial crisis, actually the intra-regional trade has been quite steady and pretty robust. And that was supported by the stability of the intra-regional exchange rate. So the idea of the exchange rate cooperation in the region is to maintain that stability in the intra-regional exchange rate.
Iwan Azis from ADB, many thanks for coming in and sharing us your thoughts. Again,
Thank you.
obviously inflation is a concern, but also, as you said, capital inflows could be the biggest pressure. Thank you very much indeed for coming in.